Welcome back to our show, your show, Let's Talk Stocks. In studio with us this morning is Keenan Falconer, and he's policy analyst at the Ministry of Finance. Welcome, Keenan.
All right, thanks much, Nielsen.
All right, happy to have you here again. But there's a very topical issue.
All right.
That's on the lips of every Jamaican now. And they're talking about the missed revenue targets by the government.
All right.
What's behind that? Why did we miss the targets?
Well, I mean, it was mostly down to shortfall in the corporate income tax. You know, companies would have filed, but they didn't pay it over in time before the end of the financial year. Some changes to accounting standards as well would have influenced that. Overall, the reason why this is so newsworthy is because we have missed targets before, you know, in a single month. That's not an uncommon phenomenon. But the more important thing was the fact that we had missed the fiscal surplus target that we had. So it was supposed to be 0.3% of GDP or 9.1 billion, and then it ended up being 1.1 billion or 0.04%.
All right. So explain for the viewers this fiscal surplus, this fiscal target that is critically important, and why is it so important?
So by law, we are obligated to meet a target of 0.3% of GDP as a fiscal surplus. After all revenues have been coming in, after you have accounted for all expenditure, including debt, whatever you're left over with, must amount to 0.3%. That was instituted in our fiscal rules as part of the Financial Administration and Audit Act, because we had been running deficits consistently for years. And just like our debt to GDP ratio target, this is one of those targets that helps to keep us, on our toes. And so, having put in that target, we want to meet it every single year for that reason.
All right. So, to explain further, when we're talking about fiscal surplus, we're talking about government's revenues exceeding government's expenditure in a particular fiscal year, not necessarily financial year.
Yeah.
April to March.
Yeah.
And so we're talking about this particular year, April 23
to March
24.
Right.
And because we would have missed the revenue side of the target, it would have caused us to go awry.
Yeah, so revenues were down by about 29 billion, was it, overall?
I think 22.
But those are tax revenues, so revenue including both tax and non-tax. And then expenditures were down by about, I think 14 billion, so it was 22 and 14, so that leaves the 8 difference that we would have been down by 8. So we still required a surplus, but it was a reduced surplus.
Right. So it's significant to listen to what you just said, because it's not like the government went out and spent as was budgeted. You actually spent less.
We spent below budget, right? And but it wasn't enough to offset the reduction in revenue. So, because of the dynamics of fiscal projections and estimates that are made, you won't really know. Even these figures themselves are provisional. You won't know what the actual amounts are until maybe 6 months down the line when all the accounts are reconciled and everything.
It raises a couple of big questions, though. And I know you say, well, yeah, they did file and so on. Had they filed early and paid over, you'd not have missed. But is there a significant, because if the government actually spent less than budgeted, is it that tax revenues in and of themselves are actually coming in less than really the kind of growth that we were looking for?
Well, it's difficult to really, make that conclusion on the basis of the figures. No, of course, corporate profits would have been down and accounted for some of the reduction, in a tight monetary environment, interest rates being so high. So on that side, yes, but on the consumer side, we're still buoyant. Everything exceeded the previous year. It's just that it's below what we projected. So
Isn't when you look at this particular government though, this government has focused on driving businesses, driving corporate revenue,
Yeah.
basically, driving tax revenue through more earnings from one, corporate, and two, what you call the GCT kind of revenue, where we're moving from direct
To indirect.
taxation, income taxes,
Yeah.
to indirect.
Yeah.
And so if that is the case, and the government has really done a lot to facilitate growth of businesses and move some of the taxes over to indirect, but we're still coming in short. Isn't that a real concern in terms of the government's own stated economic growth plans?
Well, I mean, this is an issue that not only the government of Jamaica is grappling with, but coming out of COVID, we all know the origins of this tight monetary policy. It's not supposed to last forever. I mean, the EPOC chairman repeated what the central bank governor had said the other day about giving a signal for interest rates to start coming down. And then you might see an improvement in the business environment. So I don't think it's a matter of government policy strictly. This has just been necessitated because of the high inflationary environment, which is not supposed to be a long-term policy.
As given though, and I know you put in there, we went better than 2022.
Mm-hmm.
So in terms of actual revenues, we fared better
Yeah.
for the fiscal year just ended
Yeah.
than the previous.
Yeah.
But one would say, well, you would have done well in that prior year because you're coming out of COVID, things are coming back online, so you almost would have had that growth. The real challenge would have been to grow in the year following that, which is the year just ended.
Well, I mean, even then, revenues are still up. So the revenues themselves are up from the previous year and even up beyond that. What they have not met is the internal projections. Some persons might say, okay, then that would mean your projections or estimates were overly optimistic. Some persons can say that, and we can't conclude what that might be. But
what would be the impact of inflation on the revenues? Because again, having moved to indirect taxation a little bit more than previously, then by its inflationary effect, the prices of goods that the consumers are consuming, and the fact that you've had more employment according to your numbers, the inflationary impact, some of that inflation would have been in those increased revenue intake on the indirect side.
yeah, I mean,
So it's not really genuine organic.
but in the budget itself, even after you have netted out inflation, it's still, in real terms, would have still overperformed. What the government has allocated for expenditures, even when you take out inflation, it's still about 12 or 13% above. Organic tax revenues would have grown by about 70 billion, I think. And that all came out in a report that came out the other day. So there's still organic growth there. Of course, you can argue now that there's a deceleration of growth, and that's expected,
Yes.
given coming out of COVID,
Again,
the
yes,
boom is not there.
absolutely.
But the importance is that growth is still sustained at 11 quarters, going almost 12 quarters. The actual nominal figure matters less than to actually just get the growth out there.
So you're saying there's still real growth?
Yeah, there is still real growth. Getting the growth out there, whether it's still even 1%, 2%, you don't want it to be recessionary. When you start to get to negative and then it's followed by another negative, that's when the jitters start
But
to
shouldn't we
appear.
be concerned though, as you're talking about ensuring that we not go to recessionary, or even yes, we've seen some deceleration. Shouldn't we be concerned?
I think the buffers now are much better than they were, like 15 years ago. So if you're comparing, let's say, the last Great Recession of 2008, 2009, and today, back then you might have a concern. But the progress we have made fiscally and macroeconomically puts us in better stead. So even though we have slowed down, we have not stopped. And that's the important part.
What are the implications? So we said we by law we are supposed to be 3% of GDP for that fiscal responsibility rule. Are there any major implications having missed it?
No, there are no major implications for it. The main impact that would be had is that this year, meaning 24-25, is dependent on what happens in 23-24. So, if you're making an estimate or a projection, it has to be based on the actual. And if the actual comes out less before, then you might have to revise something downward a little bit. Right? But the fact that, we would have still recorded a surplus is what's critically important. In many respects, we set targets. Sometimes we might not meet them, like, for example, wage to GDP. That was just indicative. So it was 9%. Now we have gone up to 12, 13%. But it doesn't mean that we must stick totally rigidly to it. Even during COVID, when we had to suspend fiscal rules in the event of an emergency, they must have some degree of flexibility. And once you have still made a surplus despite all of that, I think that's a good outturn.
Yeah. You touched on something there, Keenan. When you make that budget, as you said, it's really projections based on the information, based on the knowledge that's before you.
Mm-hmm.
And you would have casted the latest budget 24-25. But now you're seeing a challenge that there's a missed target. How do we adjust 24-25 budget going forward, and where will this adjustment come?
Well, most of the adjustment might come from the contingencies that the Ministry of Finance would have, because they do have contingencies for this. When you have supplementary budgets, for example, you have to draw on those resources for whatever adjustment you have to make, like wages come around. There's always a contingency in plan, and that's the benefit of fiscal planning. Whenever something like this happens, you have options. And tax revenue is just one part of the equation. You have non-tax revenue, you have capital revenue that you can draw on. There are other sources that you might get dividends from. So there are flexibility in terms of the policy options that you have to navigate this space. And then when you see how the revenues might come in, the ones that you expected before, you can now better plan going forward.
For 2024-25, are we expecting the revenues to get back up to the levels as would have been in the budget just cast?
Well, there's no expectation that there will be severe overperformance, but I suspect that the targets will still be met. I don't think there will be any underperformance. Even for the year just gone, there was overperformance in 10 of the 12 months, which balanced out the underperformance in the last month. And on that point, I just wanted to say that's why there has been advocacy in some quarters to let the tax filing be in April instead of March, because that augurs well for planning going forward, and most revenues come at the beginning of the year. The only issue you have is that for the first year you do that, you'll have a deficit, but going forward, you will be fine eventually. But these are the kinds of conversations we have to have.
If we're impacted negatively by this outturn, 23-24, will there be expenditure cuts as you talk about redoing budgets, as you talk about reviewing and so on, relooking at some of the numbers as they come in? Are we likely to see a cut in government spending?
Well, if there's a cut, it wouldn't be because it's cut out completely. It could be something that's rolled over. You know, even on the capital side, when things come in under budget, we have had funds returned to the consolidated fund because of delays in project implementation or whatever that might be. So just like with last year, we spent 14 billion less than we thought we would have.
Mm-hmm.
The same thing could happen this year. You can spend less maybe because there's a project here or two that's not necessary to be implemented right now, but that doesn't mean it won't be in the future.
So likely then, based on what you're saying, to make adjustments in maybe some capital expenditure, maybe some other government expenditure, to ensure that at the very least we're meeting the fiscal targets.
Well, I just want to say that doesn't have to be deliberate. It could just happen in the normal course of things that you end up spending less than you plan to.
But we wouldn't leave it to chance like that, though,
No,
given this
you
fiscal tight space that we operate in.
No, you won't leave it to chance. But given that the fluctuation in revenue, there are different seasons that you can expect when it's going to be up and when it's going to be down. You know, over the normal course of things, the average will just net out itself.
Keenan Falconer, policy analyst at the Ministry of Finance, talking to us about the government's missed revenue targets. He says a surplus is still being made. The economy is still on the growth trajectory, and therefore we ought not to be worried. Join us for the second part of this very interesting conversation with Keenan Falconer.